Hi, Jonathan York from Investment Research Group, looking at the investment markets ahead. We saw the Reserve Bank of New Zealand leave rates on hold last week, and really the economy is performing reasonably well, and it's just a question of when we start to see interest rates rise. As mentioned in last week's video, one of the major banks has started to talk about fixing the mortgage rates, and that appeared to be a reasonable indication that certainly over the next sort of 12 to 18 months they do expect interest rates to rise. Opinions seems to be split here at the moment. Some people are looking for sort of fourth quarter of this year, others are looking for first quarter of next year. Reserve Bank of Australia also on hold. Growth in Australia is a little bit weaker than anticipated, but still pushing along at an okay rate at the moment. And it's just a question now to see whether that can sort of push on as the global economy starts to recover. Certainly indications of that there is a bit of recovery out there. Latest data out of the US again is encouraging. It's showing a little bit further improvement out there in the unemployment rate, and also growth and corporate earnings are growing at a reasonable rate. Obviously the issue is inflation worries, and if you just look at oil now, West Texas Intermediate's pushing up towards $110 a barrel, and Brent is over 120. So there are some inflationary pressures out there in the economy. It's just a question of whether they can be kept in check. Certainly if you look at US equities in particular, the S&P index at the moment is currently trading around 14.1 price earnings. That compares to a 5-decade average, that's 50 years, of 16.4. So at the moment on current price earnings ratio, US equities are still reasonably cheap. It's obviously just a question of whether those earnings can be maintained, and if they can be, let's say then US equities, certainly the S&P 500, do look a little bit cheap comparative to historical averages, and at the moment investors are a little bit underweight in US equities. Obviously with the high New Zealand dollar as well, it's still a good time to review that international portfolio, and call us on 0800 867 323 to book an appointment, or go to the website www.irgbop.co.nz for lots of interesting articles, disclosure statement, and we look forward to speaking to you soon.